Hi guys, so in this video, I'm going to do a quick post analysis of my trade in POWL, which I just closed for a net profit of 3R. So as usual, I'm going to rate my trade on 5 criteria: the situational awareness at the time of buying and selling, my stock selection, why POWL, my entry, my exit, and my position size. So let's start with the situational awareness. The SPY for the past few months, several months actually, this is almost 8 months, has just been going sideways at 420. It hasn't made much of a move, but POWL has made quite a move up already. It was a high tide flag before it broke out on the EP day. It had gone up 120%. And this can also be seen in the pink line, which is the relative strength line of POWL that was going decisively higher while the SPY was going nowhere at all for several months. And this also wasn't a sector-wide phenomena. The gray line is the industry line, industry index, and that was just flatlining and going pretty much along with the SPY. In fact, if anything, underperforming the SPY, but POWL was not doing that. It was beating the general market and it was beating the industry. So it was a strong stock to begin with. That being said, the market has been so sideways and choppy that my own portfolio has not been having much traction, and in general, breakouts are not seeing follow through. So, because of that situational awareness, I decided to take POWL as a swing trade, and I took a very small position in it, a pilot size position, which is 0.12% risk of my total equity. Now, the second criteria is my stock selection. So what made me pick POWL? Why was POWL even in my universe of earnings winners? Now, this is a question that someone actually asked me last week. And so I made an entire video as a case study on why POWL was a really good candidate for the earnings winners. I evaluated it against my 3 criteria for earnings winners and spoke about the financials, which were really, really impressive in the case of POWL. So as you can see here, revenues increased 34%, backlog doubled to a record 1 billion, new orders more than tripled to 500 million, more than tripled, gross margins improved 460 basis points to 19.5. In general, these are blowout record numbers, and any company that can boast of this deserves to be in my universe of earnings winners. So that was the reason that I put it here. I noted down the numbers for the future. And 2 days later, when POWL set up in a bull flag, that's when I put it on my watch list. So on this day, and we can take a look at the hourly chart here, because this gives a much better picture of the bull flag. It might be hard to see on the daily chart because it's just 2 days, but note that both these days were inside of this big EP day. And while the volume on this EP day was explosive, the volume on these 2 days was very minor, just about average. And if you look at the hourly chart, I think the flag is much easier to see. This would be the bull, and this would be the sideways action. And you can see it making higher lows and tightening a lot right before it broke out. In fact, on the day of breakout, if I remember correctly, the relative volume on this was really high. We can actually check that because I'm sure I tweeted my entry and noted the R wall at that time. Yeah, it was 180% at the time when I bought it. And as you know, I just tweet all of my entries, exits, and my trade management. So you can also follow them here. If you want to look at the exact timestamps, I'm usually tweeting them within minutes of actually initiating the position. So coming back to POWL, that was the reason for the entry. So I would say this entry setup was perfect. This is one of my bread and butter setups, and the volume being there, You can look at this volume bar on the hourly as well. It was absolutely justified for me to take an entry in this at that time. Now, as soon as I bought POWL, I think it gave me 2 hours the next day itself. Let's just go back here. Okay, so I bought it on May 8th, and within 25 minutes of the trade, of me initiating this trade, it had already gone up 1 hour, and I had moved the stop loss to break even, and I had made this trade safe. So this is exactly what you want to see in the case of legitimate breakouts, and this is how they will behave. If you time the entry really, really well and get in exactly when the stock is breaking out on large volume, then they usually just shoot up and your trade becomes safe within an hour or even less, as in this case, and you're never really going to be in the red on that trade. The same day itself, after some more time, I booked profits in half the position at 2R. So if you've seen my sell video, then you know that my 2 rules for selling it as a swing trade is sell half at 2R and then half in 3 to 5 days. And that's exactly what I did. So I sold half at 2R, and then I sold the second half today, and on the 5th day of the move to net 3R on this trade. So let's just go back there. Yes, this was the 1, 2, 3, 4, 5th day of the move, and I just sold it for a net of 3R because this was a 4-hour move. The only thing that I would note here is on the hourly chart, this is much clearer to see, but for the last 3 days, POWL had just been going sideways and making another box, so to speak. So when it broke out this morning, I had high hopes that it would actually have a lot more follow through. It didn't follow through much. I mean, we are up like another % or so today, but nothing meaningful. And then with the weekend coming up, I didn't really want to take this position into the weekend in case it gaps down on Monday and I lose my open profits. So I thought it was better for me to follow my rule, which is always good advice, and just book my profits when it was around 3 o'clock, an hour before the market close. Now it is getting a bit of push here. It's like moved up another 5 cents or 10 cents after I closed it, but that in no way dictates what my sell rules are. My rule was to sell the remaining half at after 5 days. On the 5th day at 3 p.m., I was happy to get out of this, take 3R net on this trade, and not have to carry the risk into the weekend. So let's see how I did on these 5 criteria. So my situational awareness, I think, was good. We are in a bear market. We have been going sideways. My portfolio didn't have traction, so I think I did the right job taking it as a swing trade. My stock selection was 10 on 10, I would say, because I did a huge video on the financials and the technicals of this stock and why it deserved to be in my list of earnings winners. The entry was really good. In fact, it was pretty textbook. As soon as I bought it, the stock just shot up and kept going up. And within an hour, it was safe, and I'd also booked 2R. So I think I timed the entry perfectly on this. My exits, I just stuck to the rules. I sold half at 2R, and I sold the other half at 3 to 5 days on the 5th day towards the end of the day. So I can't critique myself for making any mistake here. And my position size was just a pilot size because I didn't have any traction in my portfolio. And in order to build some cushion, some profit cushion against my initial equity, I need to take a few more position sizes, see them work out, and only then increase the risk. So overall, I would say this was a 5 on 5 trade, a 5-star trade. I don't think there's anything that I did wrong or could have done better. It was just a textbook swing trade. However, if you guys have any suggestions or anything that I'm overlooking or being complacent about, I would love to hear that. Please let me know in the comments. Even I'm learning a lot from you guys. And some of the comments in my previous video was so enlightening and helpful. So definitely let me know if there is anything I'm missing or I could do better. Thank you.